Hello everyone, and welcome to our webinar. I'm going to today introduce SYSTRONICS Cashflow Forecasting. So forecasting cash inflows and outflows is important for all businesses. Many of them use spreadsheets for that purposes, and the advantage of using SYSTRONICS Cashflow Forecasting is that it uses already existing Sage 300 information to predict the cash flow. Cash flow forecast can be based on existing accounts receivable and accounts payable, invoices, as well as OE and PO orders. So in other words, cash flow forecasting integrates with Sage 300 bank services, general ledger, AR, AP, PO, and OE. The application also allows to use recurring transactions, transactions associated with anticipated new businesses, and ad hoc transactions in the cash flow forecasting. And moreover, SYSTRONICS cash flow forecasting lets the user create actual Sage 300 transactions based on provisional transactions from the cash flow forecasting module if, well, the forecast turned out to be accurate. Now let's see how the application actually works. I will open the Provisional Transactions Management console. Okay. This screen, well, it is the central screen of the application, and most of the module's features can be accessed from this screen. The cash flow forecast is done separately for each Sage 300 bank. This cash flow forecasting is all about future transactions that will generate or consume cash, right? So the cash flow forecasting uses the provisional transactions. A provisional transaction is a transaction that exists only in cash flow forecasting module, and it doesn't affect any other Sage 300 module, or it doesn't affect any other bank balance at any point. However, entering these provisional transactions allows us to see how the amount of that transactions will affect our bank accounts. Okay, so let's say we want to create a cash flow forecast for our bank CCB, and we set the forecasting period from July 1st until August 1st, 2020. And when we click go, the current balance that we can see here is the current balance of the CCC bank plus all the provisional transactions that have been created before this starting period. So now we can use AR and AP or OE and PO to create the provisional transactions. So let's begin that. Let's begin from the AR invoices. So we will create provisional receipts against our AR invoices. So here we can select AR invoices. We would like to see the transactions, the invoices that the due date is within our specified time period. So that would be July 2020 until August 1st, 2020. Let's select that. August 1st. And also here we can see transaction date. This is the provisional transactions date. And of course, we trust that our customers will pay us in time, but we can give them, let's say, 5 days after the invoice due date. Of course, here we have other options as well, except this invoice due date. But at this time, we will just select invoice due date plus 5 days and click go. And here you can see that we have the provisional transactions against our invoices. We can see the invoice amounts, and of course we can edit these amounts. And also we can see the dates. These dates are invoice due date plus 5 days. So of course, we can change these dates too, but let's say that we are just happy with what we have here, and we click Generate. You can see that we have 11 provisional transactions generated, and we can see all the transactions that fall within our specified time period. Now, for some of our transactions fell outside this time period. And on this right side panel, we can see the running balance of our bank after each provisional transaction. Now, let's again open our auto-generate provisional transactions. And this time, let's create provisional transactions against OE orders. Once again, notice that we have many other options that can determine the transaction date, like order date plus average days to pay, order date plus term, and other options. But in this case, again, we will select order date. We can give it like 3 days and select Go. Again, here we can see the provisional transactions that will be created. And again, we click Generate. 4 transactions were created, provisional transactions. But of course, only one of them falls within our specified time period. Now, of course, we all know that doing business is not only about collecting cash, but also spending that cash. And that is why we will generate provisional payments for AP invoices. So let's again go to the auto-generate provisional transactions screen. This time we will select AP invoices. We will give ourselves 5 more days of payment. From invoice due date, again, we can choose only the documents that fall within our specified time period. This will be 2020 and August 1st. And click Go. We can see again all the transactions. Provisional transaction created, like the payments created, and we click Generate. And we can see here that 33 transactions were generated. Close this one more time. And now here in this running balance, we can see that with each AP transaction, the running balance has been decreased, but we have not reached overdraft limit. We have not gone negative, so that's okay. And for one last time, let's open the provisional transactions creation screen. And this time, let's select PO orders. Again, order date, but again, notice that we have many other options like arrival date plus terms, and let's say this is plus 3 days, and generate. 27 transactions were created, and those that fall within our specified time period are displayed in here. Now, you can see here that we have now breached our overdraft limit because it turned pink in this running balance panel. So we will do something about that later. Now, so we can also have some recurring transactions. Let's assume that we have a subscription for a software from a vendor, and we would also like to include that subscription fee to our forecasting within this month. So for a few minutes, I'll close this and we'll go to recurring transactions. I will create a new subscription. I will change the date to start from the 1st of July. And let's say that we do the payments on a monthly basis. We are paying, so we are paying to a vendor. We will select the vendor. And let's assume that we pay 100 Canadian dollars each month. Now, once I save this transaction, this recurring transaction, and click Create Provisional Transaction, it will ask me to up to which time you would like to create the provisional transactions, recurring ones. And let's say that I would like it to be until 1st of September. And I click Process, and 2 provisional transactions are created in our forecasting period. And it is included in our forecasting. Now, also, let's say that apart from provisional transactions that are based on already existing transactions in Sage 300, we also know that there will be other transactions that will affect the cash flow. It's just that there is no document of that in Sage 300 on which we can base the provisional transaction. For example, we know that one of our customers will send us a prepayment. It's just that there isn't an invoice to attach that prepayment to. For that, we can go to provisional transaction entry. We can select customer receipt. For CCP Bank, the customer can be, we can select, and let's say they pay us 10,000 Canadian dollars. And also the date falls within our specified time period. And for allocation, so we know that it's an invoice. We do not yet have the document number, but we can enter the number. We do not have it in Sage. And also we can have the amount here. And add, let's save. So once we save this, we will have the forecasting in our provisional transaction as well, the console as well. And also another scenario would be that, let's say that we also have a new project and we know that it will be carried out in this specified time period within July. So we would also want to see the cash inflow and outflows associated with that project in our forecast. So also to do that, we have here create new business. We have the new business number, and we have both inflows and outflows. So we can select a customer that would pay us, let's say $5,000. And also we would need to pay a vendor, which is related to that business, let's say $1,000. Click Add and generate provisional transactions. So 2 transactions are created, of course, and they also fall within our specified time period. Okay, so about the overdraft, well, we do not want to pay additional fees to the bank, and we have passed our overdraft limit. In order to solve that, we can do the following. So let's again open this provisional transactions creation screen. This time we will choose bank transfer. and we will transfer a certain amount from another bank to our CCB bank. In this case, let's say this amount, and in Canadian dollars, and here we choose CCB, which is our bank, and click Add and Save. We do not click Generate Bank Transfer because that would generate a real bank transfer, so we would just close this. And you can see here that at some point we have not breached the overdraft limit anymore. So we have breached it at other points as well, but we can do the same, like do the bank transfer, and so that we will not breach the overdraft limit. Now, after doing all these to forecast the cash flow, we can print the report again from the Provisional Transactions Management Console. So here we click the report. Well, we would like to see the detailed transactions, so we select detail. We would like to see it for the month July, so let's select for 1 month July. We would like to include the graph, and let's say that we would like to see all the transactions that we have included in our forecasting, and click print. Okay. Now, here we can see the information of all the transactions that we created. You can see here that we printed this for 2 banks, but that's okay. We can see it for the CCB bank, for all the transactions that we created. And in the end of the document, we can see a graph showing the cash inflow and outflow for both of our banks within 1 month. So how much we have inflow and outflow shown in a graph. And this is about the report. Let's close this and close the console. And one more thing that I would like to add is that let's assume that our forecasting period has ended, like we have reached September or October, and there are some provisional transactions that remained as provisional transactions. So they were neither turned into a real transaction and they were not deleted as well. So to see those transactions, here we have a provisional transaction alert. So this alert shows us all the transactions that were not converted to actual Sage 300 transactions. So let's say the payment was not done, or we did not do the payment. We can see all of them here, and here's what we can do with them. We can either delete them because we know that that never happened, so that we will not see them anymore in our forecasting, or the payment was actually done. So we can select them, again go to the PTMC, which is the Provisional Transaction Management Console, and convert that provisional transaction to a real actual Sage 300 transaction. And that's all that I would like to say about cash flow forecasting. Please, if there are any questions, you're welcome to ask.